Good evening, Wizards, and welcome to episode 27 of Wizard Wednesdays. Now, how we've got to episode 27 so fast is beyond me, but here we are. It's been a great week so far. It's been a slow week in the market, but an incredible week for yet again another successful and now a risk-free profitable wizard call and a wizard trade. Now, going over the past week, before we actually get to that stage, let's just do the quick coin market cap debriefing as per. Understand the dominance, understand what's coming forward, look at the overall market, which as we can see today may look fairly disgusting in terms of negative and drawdown for many people who are long-term holding, but this is not only more beautiful in an aspect that we can dollar cost average and accumulate more crypto during these days of red when the streets are filled with blood, is one of the best times to actually accumulate for long-term holdings. But fortunately, we are also margin trading and actually leveraging the ups and downs and the volatile swings in the market to benefit on a margin trading perspective. So this right now, what I'm looking at is incredible for the call that's just been given yet again. So just going over the BTC dominance very quickly, we are sitting at 69.9%. Now, I will not even get up the chart because we've gone over this every episode now. All we'll do is just discuss what this has been doing, which over the past week or over the past 5 days in particular, we have seen a nice fluctuation between the 69.4 up to the 70% and plus region. When we did actually peak a few days ago or even around a week ago now at the 70% and the 71% region, it was looking pretty solid that BTC could almost immediately, with a gain in dominance, snap to the downside and drag all of the altcoins down with it. Now, we haven't actually seen that just yet, but we have been seeing a very tedious and slow movement, slowly but surely pushing its way to the downside to finally go into profit. All in our trades, again, XRP and BTC now in profit. Your stop losses should be in profit by now as well. If not, I'm going to go over that anyway. But overall, the dominance is slightly dropping, and we have now seen that reflect in the charts as we've seen XRP begin to depreciate a little bit faster than BTC has. Now, not even in percentage terms, but actually in terms of the charts as well. So we'll go over to that in a second as well. But overall, you can see today it is down over 2%, and BTC is down around 1.5%. And Ether very closely mimicking that as well. So very interesting to see Tether actually in the green for once, where over the past few days it has actually seen a pretty bad negative when the market has been pulling back. And even on the days of green, we have seen a bit of an inverse correlation with the Tether price, yet again showing me that although it does provide stability, it does not actually suffice or substitute real fiat currencies for the time being. So brushing that aside, things are looking good. It has been a slow week in the markets and we haven't seen too much movement, but it doesn't mean we cannot still go into depth on these charts, because now that the trades are in profit, it's time to now start predicting even further what may be happening with the whole backed launch and for the rest of the year. So quickly, let's switch over to the Wizard platform and let's begin. So kickstarting with BTC on the daily chart, we'll go over to the weekly in a second as well. Let's just go off what we've been looking at first of all, and that is of course this huge pullback and the huge rise we've seen breaking this counter trend line. Now, there's been so many different perspectives and analytical outlooks I've had on BTC, but what's looking pretty solid right now is what's going on in the present time being. So there's a bit of a conflict with our overall bias, but as of now, I'm not really too concerned about this just yet, as we've seen from prior price action before. Now, just going over what we've seen so far, we saw the initial breakout. We were anticipating at first a potential reversal from here, but we did break through that region. And for me, to be honest with you, it's actually much better that we have broken out, because not only did we then manage to catch the trade from the absolute top around the 10.8 region, but we've also now provided ourselves a much larger region to actually pull down from and retest this trend line again. Now, as I very clearly stated, upon a breakout of this trend line, everybody uses these, and again, the sheep and the people that do not have much experience, they look at these trend line breaks and they signify it as a way and a means of the market climbing higher. Now, fortunately, thanks to these key levels I have plotted here, and again guys, please ensure you are mirroring these key levels I have plotted, because as you've seen for the past 5, 6, maybe even 10 Wizard Wednesdays, these key levels are literally flawless and they have held up so well. I'm not going to change these anytime soon until we start breaking potentially out of these boundaries from this one all the way down to this one. Only then will we continue adjusting. But even in that circumstance, all you'll be doing is simply duplicating the distance between between these key levels to extend this down lower or to extend this down or extend it up higher. And a good example of how strong these levels are, if I'd use an arrow tool or even a line tool just to get a rough estimate from that level to that level. If I was to drag this down to there, give or take a little push higher, just to make it a little bit more precise, and duplicate this level and drag this down to here, what you can see is, yet again, going over to prior price action, look at the perfection on these levels. The closure there, the taps, the break above, the retest, holding this level phenomenally well, and then blowing through to the upside. And again, just below our key levels as well, around these regions. These zones I have plotted, in the manner I've plotted them, they are so precise and so calculated, and they've held up so well. So please, please, please make sure you are in synchronization with my charts. Even if you haven't got them plotted, just keep them in mind psychologically. And again, you can plot them however you want, but my goodness, are these levels holding up so well. And we're essentially using these levels to just make, and I'm doing it for you guys, remember, just to make it as easy as possible to catch trades from one region to another. Once price broke through this trend line, we saw it started going near. Again, daily Fibonacci is very, very crucial stuff. We actually, because crypto is so volatile, we always have very large Fibonacci's in play. And looking at how this is unfolded right now, perfection. Again, on an intraday perspective, on the 4 hour, messy, sloppy, breaking above, closing below. Go over to the daily time frame, and not a single candle could close above this 78.6% region. Not just this, but when you actually have these key levels plotted, just making life even easier for yourselves, you can actually easily identify potential wick fishing that could be occurring. Now, looking at this right now, you could see, even if you entered here with such a strong key level above that's held up so well, and knowing how these key levels are holding, you could easily anticipate wick fishing around these regions, alongside using this region to also execute even more precise sniper entries. So just going over this trade, we actually executed around this region here. Some people even averaged in from the initial trendline bounce. Regardless, right now, even if you entered around here, you would still be in profit if this is now pulled back in your favor. So going off this bias here around the $10,800 region, overall, let's say you even entered from here, all you would do by now, remember last time I said stop losses had to be safely above this level. Right now, your stop losses should be around the 10,450 to 10,500 region. Keep them nice and safely in profit. Depending on where you executed, of course, you can drag that a little lower, maybe even just above these two wicks here, just to secure yourself in these trades. Remember, everyone, and the reason so many people fail is because they're consistently chasing that glory hunting and that almost egotistical trade. You want to catch the Goliath moves like this, but in between those moves, price can be very volatile, and especially when it's holding the key levels. So this means this could very easily now have a quick ping back to the 10,650 region and even retest around here before continuing lower. Now, whilst that's pretty unlikely for the time being, as there is no confirmed ground as of yet, if we do see a green bullish candle, then we will have to anticipate a pullback around this region first, by all means necessary. But all we're doing is, in these circumstances, is if your stop losses are in profit, let's just say around here, and price pulls back up and taps this level, you've not only closed yourself out in profit, you've risked absolutely nothing, you've won the trade. And this is the biggest misconception many people have. If your stop loss has been closed out in profit, you have closed a trade in profit, which means you have won that trade. It may not have fulfilled your overall target, but you've ended off better than you were before you actually executed the trade, and your account balance will also reflect that. So that for me is a massive win. It doesn't matter if you only catch small trades like this every single time where your stop loss gets closed out. If you are closing out in profit, you are a successful trader in my eyes, and that is why I always reinstigate the fact that you have to have the stop losses in profit, because at the end of the day, it's making you guys a lot more money by taking profits off the table. So even some people with XRP, for example, they closed it off early. All I'm saying is, for now, just ensure those stop losses are secure, and things are going phenomenally well anyway. So if you did enter around these regions, you should be in around 800 to 900 pips in profit, which is absolutely incredible for such a slow moving market right now. So going over this, the wick fishing occurred up to this region. We clearly showed there was enough selling pressure here to slam us back down. And again, I actually remember being live on Twitter, not actually live on video, but live on the tweets, just tweeting away as this started happening. So we saw a huge upside explosion. Very clearly, we were starting to show this could be a very potential wick fish. Bang! This candle closure here for me, guaranteed we were looking at a very phenomenal reversal coming into play. We saw the green candle just retesting these regions here, just to confirm on a 4-hour perspective as well. After you saw that closure, all we done was pull back, reinstigate around here, plotting this zone over here just to make this a bit clearer. Nice clear zone. We broke all the way through. Remember, all of this accumulation was going on here. When we break below this support level, we've now officially invalidated it. So all that meant was retest, confirm if this level was going to hold. It did. We pushed lower. One push off our key level. Look at the precision on that key level yet again. And now look at this. Tapped above, retested, pulled all the way down, a bit of wick fishing up here, and as you can see, although it looks like we're holding these levels on a daily perspective, as you can see here, on a 4-hour perspective, we've actually potentially broken lower, a huge candle down here. Now, for many people, this could look like, and in many circumstances, it would be a huge reversal possibility, but the only difference here is for me, you will notice every time we pull lower, we spike back up and retest, pulled lower, spike up, retest, pull lower, spike up, retest, pull lower, drag this down to here where the next key level was, around here. Look at that, pulled lower, tapped off our key level, tapped off it for there again, precisely tapped where the prior region was, broken through support, retested as resistance, now we've slammed back lower. The following candle then slammed down, which normally would mean a bullish reversal, but in this circumstance we've shown that the selling pressure not only pushed this 4-hour candle all the way down, it then consecutively followed with a huge slam to the downside, which for me is giving major warning signs we could be seeing this region tested again. It did cause a nice reversal, but technically now we've broken below this level and we're now rejecting this key level as resistance, which was once support. So essentially, using this perspective as well, this level was broken, we've come back, we've rejected, but not a single candle body closure has now breached back above this region. So remember, the wicks are always a big telltale of what could potentially be coming forth. And looking at this now, guys, no candle closures above. This is looking like it could slowly begin its descent down to our first target of $9,300. So on a daily perspective, I'm not using any specific levels. I am using the key levels here as almost a guidance of where we can be tapping next, but we have many different factors in play here. We have the cross point of BACT, and again, one of my theories with BACT as well is knowing that BACT could be launched on the 23rd of September, all of the other futures platforms that are already live and trading, for example, the biggest being CME, they could already be anticipating, and remember, these people work in teams, they work in networks, there's insider trading. For all we know, they could even be pushing the potential sell-off in advance of BACT going live. So the current futures traders could even aid this push lower before BACT even commences. And I do believe it's in around 9 days now, BACT will begin starting the operations fully. So I believe there will be some aspect of the operations going live within 9 days. So just over a week, we could be seeing this action really kicking forward. And don't forget, when you do see very tedious moments like this in the market with consolidation and very slow momentum, it's more likely than not we are going to see a huge movement coming soon. The same way around here, I said, guys, the market's been very quiet. Do expect some large movements to come soon. Well, we're essentially seeing that happening right now. And again, just analyzing this on a daily perspective as well, just to show you the exact same levels even clearer. Look at this on a daily perspective, huge level of support. Everyone was buying here, everyone was buying here, but that is why I kept saying this is not the time to buy. The only time to even consider buying would actually be now. But due to the overall larger outlook, I'm not too confident on even attempting to not only hedge a trade, but there's no real reason to be going against the overall bias right now. We do potentially have a head and shoulders right here, the shoulders, the head and the shoulders, and it's on our key level, but we've seen it happen before. Look at these wicks. We did see another little attempt higher, as we could be seeing here, but overall this level did give way and break lower. And if you look at this on a daily as well, despite what you're seeing here, we are actually seeing lower highs forming, lower high up there, and another lower high here, lower low, lower low. The next lower low could easily make sense to come all the way down to this region as well. So the technicals are really aligning right now and things are looking phenomenally well. So putting that into perspective, not only are we looking at this target from this perspective on the key levels of around 9,350 to 9,400, that hopefully should be relatively easy. Now remember, $10,000 is a huge psychological level of support and resistance, and that is why it holds up so precisely every single time, because $10,000, a round number, psychological, many different factors come into play for this, but all I know is a break below will easily plummet us down into the 8,000s fairly quickly. So using this trend line as guidance, and again, now that we are actually starting to see this movement, we can even extend this a bit more further for the cheating trend line as well, just to go from that wick to body perspective. Going from a body to body perspective just means we are extending this ray out further and allowing the trade more room to actually go into profit. As you know, the general rule of thumb, I've been trying to show this many times now, when you go off the usual wick to wick trend line, it will be fulfilled, but then many times over when manipulation occurs, this is something that the average trader or the retail trader does not take into consideration. The market will usually push that little bit further just to fulfill that target over there. So looking at how this is all unfolding right now and extending this further, we have our Fibonacci, which is unfolded to absolute precision. Alongside this, we have the cross point of the trend line retest around backed. Using the Fibonacci targets, because the Fibonacci is working so well, we can see 8,900 and around 8,300. Now, as you know, our original target from way back, several months now, but when we actually started blowing through the roof and breaching $10,000 up to $14,000, I did still say, no matter what happens, I still feel like 8,500 will come through before we continue higher. So considering a few weeks back or even a few months back, you look at this euphoria, guys. Do you remember how social media was going crazy all throughout this period? Crypto Twitter, just Twitter in general, or social media was blowing up. People everywhere tweeting this, tweeting that. It was like as if everyone just came out from the shadows, out of their caves, and they came out and they suddenly started saying bull run this, bull run that. Twitter right now is a ghost town, and only a few select people within the community are still representing strong. But a lot of the key figures that came out during the bull run have quickly gone and disappeared into existence yet again. So looking at this now, overall, I'm still targeting not any real key level in particular, besides 9,350 and 8,500 to 8,300 around here. Overall, I'm simply using this trend line here as guidance, and it all depends on how fast we move. So once we start breaking lower and actually nearing this trend line, then hopefully from there we can very easily and quickly predict what should be happening next. So overall, from that perspective as well, once we are around this region, if we do actually start dipping down into the 7,600 or even the $6,000 region, this is incredible for not only long-term buyers, but also for what could be a huge margin trade if you were to actually execute longs around these regions. Even if you were to have very small positions ordered and stacked up, drip feeding all the way down, you could honestly make a crazy amount of money off these trades if you pull them off correctly. So just using this, very simple stuff. No need to be complicated, no need to be complex. I know it looks like there's a lot going on my charts, but they're simply just key levels, and I've only put these here for ease of use. If I really wanted to, guys, I could just strip this clean whatsoever and just trade that way, but it's not convenient for everyone else, and I want you guys to be learning as fast as possible. Now, something else I realized the other day, I think it was from here, I'm pretty sure it was around this region, I believe, from this trend line there. Let me just make that a bit thicker and make that a bit more colorful for visual appearance. As you can see, the wick to wick, again, not too precise, but you get what's going on here. Let's drag that down to there. There we go. So what is very perfect, actually, funnily enough, is this 1, 2, 3. We saw the false breakout there, the pullback. So not only, this is why I was actually very certain of a reversal as well, because people fail. One of the biggest misconceptions of trading is you just look at this region here, and realistically, when it comes to trading, that's all you need. You only need to be looking at the past month or even the past few weeks of price action if you want to be catching moves from key levels to key levels. But when it comes to long-term trading and catching overall trend reversals, you need to be looking at the bigger picture, and that means the daily, the weekly, and even the 4-hour I do consider a fairly bigger picture. But again, the 4-hour is always to catch a bit more of a refined entry or a bit more of a deeper understanding on what the weekly and daily are showing. So looking at that trend line bounce as well, that was perfection, quick tap through. It was just overall a very perfect trade with many confluences. I mean, this is what you need when it comes to trading, and this is why I very rarely, if the scenario is not there, if it does not hit our key level, I will not execute the trade. I'm always willing to sit aside and sit on my hands. I'd rather you guys make no money than risk potentially losing money. It does not work that way, and you will not achieve longevity by doing so. So putting this all into perspective, many people are getting frustrated. Shall I enter here? Shall I enter there? I didn't even tweet. I didn't even put a message in the Telegram, because I know subconsciously someone will go out of their way to do something probably quite stupid and execute early. And then many people, even when I didn't message, said, you know, we really messed up. We shouldn't have entered this early. We should have waited for your call. And that's why you wait for these confluences. You have to have a trading plan. And again, on the Wizard platform, that's all covered. You will have more than just a trading plan. You will have an overall gospel and a life goal and almost a Bible of what to do. But overall, you should always have a trading plan. You should understand that when it comes to executing trades, there should always be a select few criterias or confluences before pulling the trigger. Now for us, we had a crucial trendline break, which automatically means let the people ride the long if they caught the initial long. But if you miss the trendline break, you do not jump on board. For me, entering along here just to make a move from 10,400 up to 10,800, yeah, it's a $400 movement, that's 400 pips, but you're buying at the peak of a huge bullish candle. Absolutely insane, very risky and very ridiculous. What we had, however, was a trendline break. We now understood that there was going to be a retest, at least to some extent, or a pullback, because everyone buys here after this candle because they expect it to continue forever. The same incidents that happened here. I kept saying, how many times do you think you're going to see a green candle before it reverses? And we quickly got humbled with this movement here. Alongside this confluence, we had the trend line over here. We had the 78.6 and our key levels and a failure to even break above. If you do recall, I said if we do close the candles above this wick here, we will be blasting through to the upside. And would you look at that? Just below, we skimmed by our teeth, hit the 78.6, refine that a little bit more, absolute perfection across the board. And again, when you do see 78.6 Fibonacci's or just Fibonacci's holding like this in general, guys, you have to always be cautious, because just because it's held 3 times in a row, there could be that one wick to actually wick fish everyone out of the market. The reason being is everyone gets too cocky and too confident and they think, oh God, perfect Fibonacci retracement, we are ready to rumble. Market makers and people that control the market know other people are identifying these setups. So even when you have some of the greatest setups in the world, it's often your greed and your ego that can lead you to have a very small stop loss to really maximize and try and risk more money. Always have wide stop losses in this market regardless, because wick fishing is real. I didn't just make up the term for the sake of it. Again, you could call it stop hunting, whatever. I just like wick fishing because it's catchy and it helps you guys understand much faster. So looking at all of these confluences, you can see on a daily perspective, guys, this support was holding up so strong. 1, 2, 3, 4, 5, 6 candles technically were holding this level, except on the 6th candle, the 6th, we broke below, held our key level, we quickly spiked above, tapped it one last time, which just means the selling pressure is being pushed lower from here, lower. It was now aligned around 10,300. So unless we actually start breaking above 10,300 to 10,400, there is no considerable risk on this trade for me whatsoever. So by all means necessary, use this as stop loss guidance as well. If you've entered from here or anywhere here, stop losses safely above around 10.5 and just go and secure all that profit you possibly can. But overall, on a longer term perspective, guys, let's just get rid of this. Let's keep this nice and clean. We are looking at this potentially unfolding, and if we do see this break, we'll just expect another retest around the $10,100 region, and then boy oh boy are we looking at these crossovers here. Even if we hit this region first and we dip lower and tap here, this for me is just the lower end of the spectrum. The only reason I've left $6,000 open, as you know, is because of that weekly candle perspective. So looking at this right now, on a Wednesday perspective, from again, we've got a few days left till the weekly candle closes. We need to see how this candle closes, because we have broken above, we have now held this level after breaking through, so it could even be a sign that we may be rocketing higher. But all I know is we've captured the bulk of the movement, and we do need to await that weekly candle closure now before really identifying and considering what could be happening next. But again, using this as well, great perspective, something I covered on Twitter. If you notice the head and shoulders formation we have set up, guys, the exact same distance, give or take, of the original shoulder to the formation of the next head is the exact same distance from this region here all the way over to the 23rd of September where BACT is launched. Now that for me is a very large coincidence. And just looking at this overall, if you want to put this into even deeper perspective, I know I've covered this before, just a very quick trend line, doesn't have to be too precise. What you can see here, there is a major trend line that could even be retested. Very low and very unlikely, but there has been a broken trend line, as you can see, as we kickstarted 2019. So even if you were to cheat and just draw a bit more of a tacky one around the $6,000 region, there has overall been a trend line that's been broken. So you can start taking this into consideration in the worst case scenario. But overall, guys, just throwing this out there, if we do see $7,600 break, then we're going straight down to $6,000. That for me is a final target for the year if we do push lower, and that would be the final manipulative move we would see. All I know is when it comes to the futures, there's been many gaps that have formed, and I've been identifying that $8,500 gap for a very long time. One thing I noticed in particular as well, going back to the 4 hour quickly, just watching all these rejections, when the before $8,500 in fact, many gaps started forming on the CME futures. Basically on the CME futures charts, you were starting to see many gaps form, and if not, they were being tweeted, they were becoming very public. So what was happening was it was very easy to catch trades during that period over the past few months because the gaps were being formed and the market was going straight back there to fulfill those gaps. The only difference now is when the market makers are aware that people start actually clocking on and realizing what's going on, they very quickly diminish that and then switch over to a new strategy. The $8,500 gap has been open since around June or July, I believe, and I've been waiting for that to fulfill. That's why ever since that gap formed, I disregarded this, I disregarded $14,000, and I've sat here patiently knowing it could take weeks or months. I just knew it would come through. And again, looking at this drop now, guys, we're just going lower and lower and lower. And this should show you now, when I give a long-term prediction, many people are fixated on short-term growth. Many people were trapped in the euphoria of this bullish momentum. What many people do not realize is calls in the crypto market can be very tedious. They can be very painstakingly long, and they can take a long time to come through. But as hopefully this is proven now, yet again, just always reinstigating this on every episode, the long-term mindset always wins. I can catch these trades for you all day long, and we always do, but the long-term projections, they can often seem crazy when the market is showing different signs. But I promise you, 95% of the time at least, when I've given these long-term calls against the market bias, they do come through eventually, and it does shock a lot of people. But that's the update for BTC out of the way. Let's jump over to XRP. XRP looking a little bit more juicy on this end actually, and rather delightful if I do say so myself. So what we actually covered with XRP, going over this quickly on a weekly perspective, nice red aka purple candle right now, broken above yet again. So let me just show you this. When we did actually break through this region here, this huge wick was left unfulfilled, so it was a bit of a warning sign for me. And again, using the same analogy that we used on BTC when it came to the lower highs and the rejections, we had this region here, we closed here, nice level of support. On a daily perspective, as you can see, it was holding up quite nicely. We saw a bit of consolidation back and forth, but this level held up very strong. And as you can see, once we broke below this level, we came up, we rejected it again, and we pulled to the downside. Continuing on from my ideology of having, many biases, have a look at this. Rejected, 2 levels of crucial support turned resistance, double tap. Crucial counter trend line broken and retested. Not only this, I gave you the 0.265 region as a crucial execution region up to 0.272. We tapped that 61.8 at the 0.267 region precisely here, alongside candle bodies not closing above our line of 0.265. It was almost perfect. Everything was unfolding absolutely to plan. So we had many confluences, and it would have been wrong and almost rude not to take such a nice trade that the market provided. So when you go over to the weekly perspective and look at this, you can see we broke below this level of support here, closed all the way below, broke it, retested pretty much precisely just like BTC did, and now we're seeing another tap of our level 0.265 and slamming to the downside. So again, I would like to see a more of a bearish closure to actually confirm this movement coming down, but overall we're in profit anyway. There's not too much to worry about for the time being. So on a longer term perspective, just like BTC has the $6,000 region, I'm going to put the 16 cents region out there if we do see BTC actually push that whole way down. That would be the final level for XRP to actually achieve before any potential bull run, if we did see a major market meltdown. And only in that event would I give this as a possibility, but I'm just throwing it out there, just like $6,000. If the market does a shocking move like this and slams down in a huge manipulative push, please be aware of $16,000. But overall, should we start seeing our targets come through? As you know, the main targets for now, short term, we're looking at around 0.235, pushing down to around 0.22. But overall, I am hoping if we do get the 8,500 to the $7,600 push on BTC, we are looking at around 20 cents. And hopefully over the next week or two, we could be seeing that come through by the 23rd of September as well, if not by the end of the week. Looking at how these candles are on a weekly basis now, they're almost looking borderline bullish, as if they could reverse to the upside. But this is the constant trickery the market sees in the early stages of the week. So as we start nearing the end of the week, we normally have a lot of trickery from Saturday and Sunday. The market becomes very volatile and very active on Saturdays and Sundays, where normally the whole bias can change in a heartbeat when the daily candle at 1 a.m, midnight, wherever it may be, depending on the time you are at. For us, it's around 1 a.m. here in the UK. At the end of the week on Sunday, when the weekly and daily candle closes, it's often rather different to how it started off in the beginning of the week. Even in the beginning of the week, when you see a large movement, it can often be a trick before a reversal happens. So I'm hoping to see if this candle closes below here in particular, then my goodness, if we break this 0.23, 0.24 level, we're going straight down to 20 cents as well. So let's just analyze this now. We're seeing a nice bearish candle. You should be, let's just do a little bit of a pip calculation on this as well from exactly where the trade was given. You should be around, after a peak of around 140 pips, you should be floating around 116 pips overall. If you are riding this trade, I would simply put your stop losses above this wick here around the 0.263 region, give or take, depending on where you executed. Some of you even got the perfect entry here as well. So if you did, just keep the stop losses in consideration on a 4-hour perspective as well. We have almost got that head and shoulders as well, the shoulders, the head and the shoulders, but we are breaking a lot lower. Now, here is why I do think XRP could most definitely break much lower. Although this looks pretty good, we've got some support there, whatever. If you do pay more attention to this level, where we have seen the majority of the price action, disregard all of this, because when you see a large crash through or a large breakthrough, it normally means there's going to be a reversal. But when you see price slowly drip feed its way through and actually process a breakthrough with a retest, it's more likely than not going to actually break lower. And if you consider this here, when this happens and it breaks through, there's no retest, it normally means it's not going to go back lower. But now that we've broken this support again, closed below, just like we saw before, pushed up, retested, you could be seeing some more volatility, as you always could, but overall we've pushed, we've tapped, and this should now lead us down to 0.245 and 0.235. So it's a nice little giveaway. We've got this whole region here accumulating as well. Just take into consideration any formal pullbacks. We haven't seen confirmed ground yet, so once we get the green candle, we can start dictating where price could pull back towards. So many people right now would just throw this on here and be like A, B, C, D, and whilst it may come through, we have no confirmation price could reverse here yet. So many people might try and counter a trade or do some form of hedging, and you execute here, but then what happens is price drops all the way down, maybe even drops down to there, and then it reverses, and only then do you begin plotting a fib level. So let's just see what would actually line up with our targets. Let's just say we did actually push a little bit lower to 0.248, 0.247, in line with these prior wicks. If this first push actually came down to here, then you can see it lines perfectly with our next target. So you could see a pushback here, pull up to around this level, give or take, and then push all the way lower yet again. But overall, I'm not even looking at these pullbacks right now. I'm just letting the market do its thing. On a 1 hour perspective as well, as you can see, we could be looking at a little short-term breakout, maybe coming to 0.6 up to this region here, around 0.258. But overall, this is looking great. We're broken below, everything's looking good, letting this run and float freely in profit for the time being. So having a look at this right now, one final time, closure, consolidation, look at this as well, break below, retest, as we've seen many times over. So let's just use another example here. Broke below support, retested, dropped, retested, dropped, retested, retested, dropped, broke through, didn't actually hold the retest, we broke below again, look what happened again, we broke through, retested, support, term resistance, and we died all the way down yet again. Now, on a weekly perspective, guys, because we've actually broken this major trend line, all we're doing now is we're actually awaiting and plotting the next zone. So plotting this here, this is our new official extended weekly trend line. You must always adapt with the market. Again, if we were to leave this over here, many people would have been catching bounces for a very long time. Looking at this break here, many people would have been like, whoa, we have to short because it's broken through the trend line. But if you had actually adjusted this in synchronization with the market around here, you would have seen even from here onwards, there wasn't actually a break, and it actually held precisely well. As you can see that even clearer, when you broke through, it retested perfectly and died the whole way down, which fortunately we all caught this movement as well, simply by adapting to the market conditions. So now we must extend this all the way out to here. Let's not make that too long as it can get a bit messy. drop down to the daily just to see how this works out. And Lord behold, it lines up pretty nicely with what could be this movement coming through here. So a quick spike through, maybe even tapping the 235 region, closing higher, and then from there we can dictate what happens next. But you must always confluence and combine the longer term outlooks and the key levels alongside the intraday and intraday levels as well to make sure you've got every corner covered. And this is why I often give two biases sometimes, because even though it's not me saying, I don't know what I'm doing, I'm just giving both biases to always be right. That is the furthest thing from the truth. And many of you should know by now, especially if you've been following me over the past few years, that's not how I operate. I'm not one of those people that gives two biases and say, maybe it can go this way, maybe it can go that way. That's factually incorrect and something that many people in the industry use to maybe go against me because their calls may not be as accurate sometimes. But overall, crypto can be a massive battlefield and it's best to just steer clear of any drama and just focus on the charts themselves. The reason I give two biases is because we do not take the two biases. That's the fact. I do not give a bias of saying it could go up or down and then you just decide what to do. All I do is I give you a scenario and say we will wait for this region to be fulfilled. Let's just say here, if we hit this level and we hold, we buy. If we break through this level, we sell. And then from there, I've already given you in advance where it would fall to if it broke through, and I give you in advance where it would rise to if it goes up. But then even when I do give you that bias and it actually unfolds in one of the favors of our biases, I always tell you which direction to take. And a good example was this move here. I did say upon a reversal and a break below, which is where we caught the trade, we would be spiking down to 24 cents, which is exactly what happened when this call was given. So all I'm doing is I'm basically getting the two highest probability setups that, again, not many people are actually showing you. Many people are just whacking out bullish predictions left, right, center. I'm giving you two high probability setups, and then it's down to you to monitor in line with me what's going to be happening next. And then from there, we pull the trigger together. And basically, if it goes, let's just say you're always going for a long-term bias. You're always focusing on the upside or the downside. When you're so fixated on one bias and you become married to it, it can really be detrimental to your trading, because what's essentially happening is you're so focused on it falling down and you want to be right. You may have posted it on Instagram. You want to prove people wrong. You want to prove your friends wrong. The market has no time for the ego. It has no time for egotistical behavior. It does what it wants. We are slaves to the market and we must abide by what the market provides us. The market provides us signs. We follow those signs and we make money as the institutions make money. We are essentially catching the train that the institutions are manipulating for us to a specific direction. So I hope that sums things up as well. Remember, my best intentions are always for you guys. Your best intentions are always at my heart. That's all I care about here, and hopefully I've been showing that now over the past few Wizard Wednesdays. But guys, I think we're nearing 5.5, 6 weeks now of consistent calls. Not a single trade has gone wrong. Again, even the ones that have gone against us have been closed in profit. There has not been a single loser for over a month now. Now that for me is one of the strongest track records in crypto I've ever seen, not just for myself but overall in general. It's very hard to have a very consistent track record because of how crazy and volatile crypto trading is. But I'm hoping by now you guys have found it a lot more relaxing, a lot more calmer, and you're understanding how patience can really go a long way. Yes, we've waited a few days. Yes, it's been a tedious week of waiting for some form of retest and breakout, but instantly upon waiting with some patience, we've sniped an entry, zero drawdown on either trade, instantly into profit, over 1,000 pips across both pairs collectively. It's been a phenomenal week. It's been a phenomenal over a month now, and hopefully we can end September with a bang and then kickstart the real fun. Now, if the real fun does work out the way I anticipate, then the ending of 2019 could be even more magical, and we could even be ending up on BTC in particular back above $11,000 and even all the way back to $16,000 by the end of the year. And this is a massive possibility. This is all coming into consideration after we see the pullbacks first. So let's just see how these levels hold up. Should we fail to break all the way down to these levels, we'll take our profits. We will await some form of reversal setup, and we are buying this all the way to the moon, ready for the BTC halving, backed futures to go live, and of course the next bull run. Now guys, I'll be seeing you in the Telegram shortly. Hope you've enjoyed this Wizard Wednesdays as always, and I hope you're all having a very profitable week so far. Crypto Wizard over and out.